All right, guys, we're going to go ahead and start the Senior Solutions Agent Training part of the call. And today, what Jimmy and I thought that we would do is we would just go over some of the major carriers that we are currently working with and just really kind of go into kind of a brief overview of the different carriers and what they bring to the table. As you recall, we've talked about this many times, is that when we make the decision to bring on a new carrier, it has to be for a reason. So we're not going to sign up a new carrier if they really bring no value. So every carrier that we have that we bring to the table is here for a specific reason, and sometimes a very specific niche. Okay, so this is just going to be a kind of a comparison between uh, different carriers that we have. Jimmy, which carrier do you want to start with?
Let's start with Mutual of Omaha.
Oh, okay. All right. I mean, we can do it in any order. I just put up a list of the carriers that we're currently working with, but Mutual of Omaha sounds great.
Okay. So guys, I just got to tell you, this is going to be a lot of audio. You're going to need to take notes. So grab a pen and paper. Um, I do want to say this. I'm gonna break down each carrier, and I'm gonna talk about, um, let's say, the not only the advantage to the consumer as far as, like, what the niche is, but also like how it affects the agent. And so, without further ado, let's start with Mutual of Omaha. So, obviously we're in the final expense industry. So we'll start with Living Promise, which is a final expense product. And so, they have, it's a whole life product for ages 45 to 85, and your face amount, the death benefit, is going to start at 2,000, and the maximum will be 40,000. Okay. Now they have two levels of coverage. They have level, which is an immediate day one coverage, and they have graded, which is a 2-year waiting period for natural death. And so if they go graded, then the maximum amount of coverage would be 20,000. So I just thought I'd throw that out there. Um, here, before we cover the health, let's just cover some of the things that are important to the agent. So first off, if you go graded, that is a 20% lower commission than level. So just kind of know that. Now, if they're level and they go ages 80, 81 to 85, that's a 40% lower compensation. So just know that if you're writing somebody up over age 80, you're gonna take a reduced compensation. Now, the first thing I like to cover with this is, like, diabetes is pretty simple. They ask, when were they diagnosed, if it was before the age of 50 or after, and that's your key number. So if it was diagnosed before the age of 50, then they're graded. If it was diagnosed after 50, even if they have insulin use, they can go level. And so that's a huge advantage there. I can tell you this: they probably have the easiest or simplest application with knockout questions. It's easy to understand. And now Mutual of Omaha has the e-application, where you can get a decision, at the completion of the application. You have a hard decision if it's approved, not approved, graded, or maybe it does maybe need further review. Before I go on to the next product with Mutual of Omaha, I don't know if, Joe, if you want to add anything to Living Promise.
For Living Promise, no, the only thing I'll add is that they do have a very simple paper application, and there is an optional phone interview that you can do. You don't necessarily get a hard approval, but you do get an approval. And I would say, if they tell you it's, you're okay to submit, that 99% of them go through. So my recommendation is, if you're going to do a paper app, take the extra time, go ahead and do the phone interview. I think it really locks in your clients a little bit, and you're walking away from the sale with the confidence that 99% of the time they're going to get approved. That's it. The only thing I would add.
Well, one thing I forgot to mention too, we are set up with Express Pay with Mutual of Omaha. The Express Pay means that when the policy issues and it's placed, that you're getting paid even if the first premium has not been collected. So in many cases, our customers are on Social Security, and like today's the 18th of the month. If you scheduled their first premium on February the 1st, you don't have to wait till February 1 to get paid. You'd get paid now because it was issued in place. So to me, that's real important, because it generates the cash flow that we need to continue to buy the leads. So the next product that I really like with Mutual of Omaha is Term Life Express. And so, this is going to be for ages 18 to 70. And your face amounts are going to be 25,000 to 300,000. Now, with Mutual of Omaha, anything that has the word express on it means that they don't have to take a paramed exam. It's non-medical. It's issued on an express issue. So ages 18 to 70, 25,000 to 300,000, no medical exam. If they're 18 to 50, they can go 30 years. If they're 18 to 60, you can go a 20-year term. And if they're over 60, then you can go with a 15-year term. And then you can do a 10-year term at any age. So I just thought I'd throw that out there. The big benefit here is that Mutual of Omaha offers a return of premium rider. We call it ROP for short. Basically, if they elect to have that rider at the end of their 20 or 30-year period, they can get all their money back. Everything that they paid into it, they get it all back. Or they can take a reduced paid up option. So in other words, they'd get a lower face amount, but then that face amount would be paid up, and they don't have to make any more payments. So I really love positioning this to younger folks. And I got to tell you, it's only available up to age 50. So as soon as they turn 51, it's no longer available. Now, the ROP is not available in every state, but most of the states it is available. And then before I move on, do you want to add anything to the Term Life Express, Joe?
Oh, just one quick tip. I highly recommend, when you do the return of premium, especially on the younger ages, it's going to give you, there's an option. You can do 20-year ROP or 30-year ROP. I highly recommend always try to do the 20-year ROP. Okay, it's a higher premium, but they get the money back sooner. And oftentimes, if you do a 20-year ROP, is that the cash that they're getting back, if you convert that to the paid up policy, in some cases, it's equal to the original death benefit. Where versus you go 30 years. They're getting back a little bit more money, but they're much older, so their life expectancy is 10 years less, and the paid up insurance is not as much. So always try to go for the 20-year versus the 30-year for the ROP. That's it.
Nice. And okay, and then the next one, it's GULE for short, and that stands for Guaranteed Universal Life Express. Okay, so on this product is for ages 18 to 65, again, non-med issue. You can guarantee, the guarantee means that it's guaranteed to last to a certain age, and you can pick any age from 80 to 120, and it doesn't have to go in increments of 5. I mean, it could be 81, it could be 83, it could be 97. However, on your phone, when you're quoting it, it goes in 5-year increments. If you're using desktop software, you can plug in the specific year or age. Now, there's 2 ways to sell this, okay? If you're working with the final expense client that's in really good health and they want a higher face amount, and it could be 25,000 or 30,000. I mean, it doesn't have to be really high, but if they want a higher face and you need a competitive rate, sometimes the living promise is not low enough. So you can go 25,000, do a guarantee to age 120, and you can bring that cost down, typically $10, $12 a month. And so you get a better rate for the client, okay? The other way I use this is I use it kind of like a term, because if you remember on Term Life Express, if they're older than 60, they can only go 15 years. So if you have somebody, let's say they're 63, and they want a 20 or 25-year term, you can position GULE to guarantee it for that age. So you can guarantee it to age 83 or age 88 and essentially give them the term, that they're looking for that's not available with any other carrier like that for that age group. So that's 2 ways to position GULE. Before we move on, do you want to add anything to that, Joe?
No, I just want to emphasize that last part you talked about, what the using it as a term product is absolutely brilliant. I had never thought of that until you brought it up, and it's really amazing. So that was it. That was my only comment.
Okay, thank you, Joe. All right, lastly with Mutual of Omaha, and I got to tell you, I mean, they have a lot of products, but we got a lot of carriers to cover. So I'm just going to briefly touch on this last one, which is long-term care. Occasionally, you'll have somebody bring it up, and they are interested in long-term care, and rather than have to go get contracted with a long-term care company, you already have it right here with Mutual of Omaha. It's a non-medical. They don't have to take a physical. They do have to do a phone interview. It's a requirement. They might need, attending physician statements depending on their health. But I mean, it's a pretty easy app to do. I highly recommend to do this on your computer, do an e-app. That way you don't miss anything and it's going to process smoothly. So that's all I have for Mutual of Omaha. Joe, where do you want to go next?
Can I add just 2 more products?
Oh,
with
sure.
Mutual, yeah. So just 2 other real quick products. I won't go into a lot of details. I'll just say you should really take a look at them. One is the Children's Whole Life. They have an amazing, simply amazing Children's Whole Life product. It's a short 3-page application. You can put up to, I think, like 8 or 9 children on one application. Simplified issue underwriting. They only ask 3 health questions. And then the other one product that we get a lot of agents that write, Mutual also has a standalone accidental plan with obviously no medical questions. So for those clients that are looking for some additional benefit, take a look at the standalone accidental. You can do it as a single person. You can do it as a family, husband and wife, and you can also do a complete family, husband and wife, and covered all the dependent children as well. And there's also a return of premium feature available on the accidental plan. And that's it for Mutual.
And you know what? Let me just say this real quick about the accidental is that there is no, I guess you can say, career field or occupation, that is eliminated from it.
True, right.
You can show this to a police officer, a firefighter, anybody, trucker, anybody that's in a high risk, oil field people, high risk job. They can qualify it, and it's a guaranteed issue. So I mean, all you got to do is write them up.
Yeah, and it pays a pretty good comp as well.
Yes, sir.
I don't know. How about we just go straight across? How about Foresters?
Foresters. All right. So with Foresters, their final expense product is called Plan Right. Their age group is 50 to 85. If they have 2 levels of coverage, just like Moo, or actually they have 3 levels. They have level, graded, and modified. Okay, so I'll just tell you this: there's not a whole lot of difference with their level than anybody else. Where they stand out is their graded product. Instead of it being a 2-year return of premium, the way they do their graded is it pays 30% of the face amount if they died in year 1, and it pays 70% of the face if they died in year 2, and then it's 100% of the face after that. Their graded product is going to be ages 50 to 85. They can go up to 20,000 on up to age 80 and 10,000 up to age 85. What I love about their graded is that they do not reduce the compensation, so you get paid the same amount, and the customer gets a better deal. And I just wanted to point out some of the medical conditions that qualify for graded with Foresters. And the first one is they do take Parkinson's graded, any liver or kidney disease, chronic hepatitis, cirrhosis of the liver, all that would be graded on the 30, 70, 100 platform, and COPD. Okay. Here's something that's interesting when it comes to diabetes with Foresters. There is no age, and they don't ask about insulin use. So regardless of when they were diagnosed or if they're using insulin, they're actually preferred with Foresters as long as they have no complications associated with diabetes. That would include neuropathy.
Very good.
You want to add anything to that, or Joe? Or
On
the plan, right?
No, that's perfect.
And then they have a couple other products. I'll just briefly say this. You got a Smart UL. The pricing is more competitive than the GULE. So, you know, if you really need to get that price down, you can go Smart UL. It lasts to age 100. It doesn't go to 120, but it does go to 100. And then also, they do have a participating dividend product on the Advantage Plus. So you can, you know, if you don't know how the dividends work, so every year based on the profitability of the company, they pay dividends to the shareholder, or not shareholders, to the policy holders. And so those dividends, you can take them in the form of cash, or you can convert it to paid up additional life insurance. So their policy could grow, the face amount could grow with those paid up additions. And they also have a unique thing that you can add a term rider on the whole life. So, you know, if you had a customer that maybe they're kind of in the middle, and maybe they're in their 50s, and they know that they want a whole life product, but at the same time, they need some extra coverage right now. Maybe they have a mortgage, maybe they still have kids at home. And so you can do a 10 or 20-year rider to kind of get them some extra protection now. And then after the 10 or 20 years, that'll fall off, and they still have their permanent whole life policy in force. So that's Foresters.
Yeah, they've got a great lineup of products. Anything else, or you want to move on?
Let's move on.
All right, how about United Life?
All right, here's my take on United Life. I mean, they offer a lot of stuff, right? But you know, they have a really cool product that's almost guaranteed issue. Okay, they have a few health questions, but it will cover people from ages 0 to 90, and this graded product pays the agent a 70% comp. It is as earned, so there's no advance. But I mean, guys, this is phenomenal. You know, Joe, I didn't bring the health questions in front of me, but I think they only ask if they have AIDS, if they're on dialysis, if they have dementia or Alzheimer's. And then the fourth question, I believe, is do they have a surgery that requires anesthesia scheduled in the next 12 months?
Right.
4 knockout questions, they're eligible.
One of them is a little bit longer. So they also ask if they're currently hospitalized or residing in a nursing home.
Oh, okay.
So that's in there. It's kind of like lumped in, I think, with the same one about like the surgery question.
Gotcha.
But it basically only three, really only like the AIDS question. That's kind of a standalone question by itself. And it's really just three those three health questions, like you said. It's a phenomenal product,
So
and pricing is very competitive as well.
it is. And let me tell you who this really could work for, okay? This could be for those folks that have family members that have Down syndrome of any age. Think about it. This product is 0 to 90. So even if they're adolescents or they're adults with Down syndrome, you can get them covered. And that's a knockout question with every other carrier. Nobody wants to cover that. You can cover folks that maybe they just recently had a heart attack or stroke. I mean, it doesn't matter. And the way their graded works is it is a return of premium plus, I think it's 4.5% interest in year 1, but then it's 50% of the face amount in year 2. And then it's 100% after that. Is that correct, Joe?
Yeah, I think so. Or is it a 3-year wait?
No, it's a 2-year.
2-year only. Okay, yeah. That sounds right. I know it's 50% in year 2,
In year 2.
which
So
is phenomenal.
yeah. And again, it's a whole life product. So, and now aside from that, they do offer a 5-pay, 10-pay. I think they have a 7-pay, but for sure a 5 and 10-pay. And if you're not familiar with that, what that means is they can buy a policy that's a whole life policy and pay it in full in either a 5 or 10-year period. So if you ever get those people that they pull their calculator out and you give them a quote and they say, well, if I live to age 90, how much would I have paid into it? You know, they start getting mathematical on you. Well, you can switch them to one of these paid up policies, and they're going to pay a higher premium up front, but the policy is paid in full. They're not paying on it forever. This is also good to position to compete against people that are buying pre-need funeral products from their funeral homes. So,
And that product you're talking about, that's not the guarantee. That's not the graded benefit. That's like a traditional whole life.
correct.
Okay. All right. Perfect. The other real quick thing I'll mention before we move on is that on the graded benefit, especially if you have a client that's looking for a higher face amount, you can go up to $50,000 on their graded benefit, which is twice the amount of most carriers. Most of them are only 20 or 25,000 maximum issue face.
Oh, good. Very good point. Yes, sir.
Okay. You want to move on to AIG?
Sure.
All right, guys.
We're signed up with AIG to sell their guaranteed issue product. And so guaranteed issue is for ages 50 to 85. And regardless of their medical condition, they're eligible. Okay. I will tell you this, that, they do advance commissions. They do a 6 months advance. But you got to be really cautious because their chargeback policy is like the toughest I've ever seen. They actually have an 18-month chargeback period. If the policy cancels or lapses in the first 12 months, it's 100% chargeback on the commission, regardless of how long they had it. So it's not charging back the unearned commissions. It's charging back all of the commissions if it falls out in year 1. Okay. After the first year, from months 12 to 18, it's a 50% chargeback that policy lapses or cancels.
Yeah, not a big fan of that, but they certainly are very competitive. As far as I know, from my comparison, They're the lowest priced carrier out there for guaranteed issue, and pretty simple to use, guys. It's either you can do a paper application if you want to. I'd recommend just have the app on your phone and just do an electronic application. You don't even need a tablet. It's mobile friendly, so you can do the app right from your phone.
Yep.
Not really much to say about guaranteed issue. It's pretty straightforward. Anything else you want to talk about AIG, or you want to move on?
Let's just underline Gerber Life while we're on guaranteed issue.
Okay.
And it's the same thing. It's guaranteed issue. The only big difference here is Gerber does not advance commission, so you're paid as earned. Now they are ages 50 to 80, and they go up to 25,000 in face. So just knock that out real quick.
Yeah, they're as earned too, but they also don't charge you back for lapses.
Exactly.
Only if they die. Right. Not on lapses. So Gerber's a great carrier, great name recognition, and they raised their prices recently, but they're still very competitively priced for a guaranteed issue.
Mm-hmm.
You want to move over to Transamerica then?
Yep.
All right, we'll go back up here. All right, guys, we're going to talk about Transamerica now. So,
man, guys, there's a lot to talk about with Transamerica. This has become my favorite carrier. I have to tell you, they do final expense ages 0 to 85. Okay. I'm going to tell you this, that they have 2 applications. Okay. So they have one app for ages 0 to 44, and then a second app 45 to 85. The health questions is what's the difference. Okay. So I'm just going to focus on the 45 to 85 group. I mean, that's like 90% of our customers. They do offer direct express, so that is accepted if you have a client that does not have a bank account, but they get their Social Security benefits deposited on a direct express card. Transamerica is the only carrier that accepts that, so you don't have to miss out on a sale. They also have a 10-pay option. So I really like that. So, I mean, it's the same app, same health questions. You can either go with the regular whole life, or you can go with the 10-pay whole life option. Here's some bonus on Transamerica for the agent. Real quickly, they pay the best renewals in the business. So if you're looking to be in this for the long haul, the more you write with them, the higher your renewals will be. They also do list bill. There's not a whole lot of that going around, but if you ever want to write a group, maybe you're working with a small business owner, and they want to be able to bill it, or do a payroll deduction, Transamerica can actually do that for you. So I don't want to spend a lot of time on that. Just want to make sure it's available. Now, on the 45 to 85, they do not ask for a driver's license. I love that. How many times do you get hung up on that with Mutual of Omaha? A lot of people have an ID, but they don't have a driver's license. Then you're trying to answer those questions. Transamerica don't even ask. Okay. They also don't ask for height and weight. So oftentimes you'll come across somebody that's either, overweight but very good health, or maybe they're even underweight. You can get those people done because they don't ask for height and weight. Then let's see here, diabetes. They're preferred as long as the diabetes was diagnosed after the age of 19. Okay. If they're on insulin, then they go to standard. All right. Preferred, you can get people done that have bipolar or systemic lupus. You can get people done with neuropathy. That's not even a question on the application. Standard, anybody that has COPD, emphysema, chronic asthma, as long as they're not on oxygen, they can go standard, which is a day 1 coverage. If they had a heart attack or stroke 12 months to 24 months, they can go standard. So in other words, not in the last 12 months, but maybe it was 13 months ago or 18 months ago, they can go standard, right? That's normally a decline everywhere else. If they have AFib or an irregular heart rhythm, that's standard. Parkinson's is standard. Multiple sclerosis, MS is standard. Cancer, if the treatment would, they've been cured cancer-free, no treatment for the last 2 years, that could be standard. Most carriers are asking 3 to 4 years. And then there's no phone interview with this product. So you don't have to worry about doing it. It's not even an option. The only time that the underwriter requests a phone interview is when they pull up their medical information or prescription history. There might be some questions that they need clarification on. Other than that, there's not a phone interview with Transamerica. That is the final expense product. Joe, did I miss anything there?
Well, no, you didn't, but let me just add a couple of things. One I think is a big deal, and it throws a lot of people off because it's if you look at every final expense app out there, none of them ask this question, but it's part of their underwriting guidelines, and that's blood thinners. So Transamerica is one of the most blood thinner friendly carriers you will find. They accept warfarin, which is in some cases it's either a knockout drug or it'll take them from preferred to graded. So for example, you could have a client that maybe they did have a stroke, but it was like 5 years ago. So you think they're in the clear, but they're taking a blood thinner because it doesn't ask on any of the applications. It doesn't ask, are you taking blood thinners? Some of them ask about treatment, and a lot of carriers will consider blood thinner as a treatment for maybe could be for a stroke, or maybe they had a heart attack, maybe they had a valve replacement. So that is a plus for them. The other real quick thing is, and not that we run across it very often, but I have come across clients that have epilepsy or they get seizures, and they're on anti-seizure medicine. So Transamerica is very liberal on that. As long as they haven't had, they could be taking anti-seizure medicine, but as long as they're not having seizures or they've had less than 12 seizures in a year, they can still get preferred. And then the last real quick thing is kind of a greedy thing on commission. It's the same commission from age 0 to age 85. There's no drop in commission for preferred or standard. Only if you go graded do you get a dip in commission.
Excellent point.
And that's the only other points I had on TA.
Now let me just say this. I think most of the agents, here's the real reality of it all, is that most people prefer mutual over Transamerica only because of express pay. That's the only reason why. Well, with Transamerica, they will convert you to express pay if they measure your last 6 months performance. If you meet a minimum criteria, and I believe it's 22,000 in issue paid premium, and as long as your persistency is better than 70%. So if you can meet those guidelines, you could be switched to express pay. And I guarantee you, once I was switched to express pay, they easily became my favorite carrier. So guys, it could happen.
I hear you.
And then I will say this, they also have a term product that's very competitive. It has some really good living benefits. They call it the Trendsetter LB. And then they have the FFIUL, which is a fixed indexed universal life product. They call it Financial Freedom IUL. Very, very competitive. I got one for myself. So if you're in the market for that, they have a very good IUL program. So
yeah, those are just one comment on those. Those are excellent, fully underwritten products. Very, very, very competitive price. I love that living benefit, the Trendsetter. And the cool thing is you can do those and that product, they do have e-applications, so you can go 100% paperless, which I would recommend because they're pretty lengthy applications.
Okay.
All right, let's go to how about Americo?
Americo is a new carrier for us. Here's the cool thing about them. There is no paper app. You're either going to do it electronically or you're going to do it over the phone. The biggest thing I can position with them is their smoker program. So if somebody is trying to quit or just recently quit, it's been less than 12 months. All the other carriers is going to give them a smoker rate. America will still give them a non-tobacco rate. And then they have 3 years to go ahead and quit. They will send them out like a little kit to test to see if they did quit or not. And if they did, they're able to keep that rate. If it turns out that they weren't able to quit or they went back to smoking, then they will not increase their premium. They'll just lower the face, adjust it to the smoker. So I think that's a really cool thing that you can position and close. I don't know if you want to add anything to that, Joe.
No, not to that. I mean, if you're done, I have more stuff to add about
Yeah,
Americo,
I'm
but
done.
okay. I know it's a new product, guys, so we're just kind of learning the ins and outs of Americo, but it is their final expense product. If you really look at it and you look at their underwriting, it's really, really competitive. One thing with Americo that's different than the other carriers is that when you do the quote, initially it may look like it's a little bit higher than the other ones. Keep in mind, the Americo automatically comes with the accidental rider included, and there's no age limits. So even if you're writing someone who is 80 years old, they're still going to get the accidental. Whereas with Transamerica or Mutual, it's not even available at that age, and it never falls off. It's good for the life of the policy. The other thing about Americo is they've got this really unique bonus program for agents. It's called the You First Bonus. And what I like about the You First Bonus is that it's biannual. So with a lot of these carriers, they have the trips, which are great. But if you miss it for the year, you got to wait a whole nother year. With Americo, their bonus program goes from January to June. So they have a payout in June, and then they have another payout in December right before Christmas, and it's an 8% bonus of your premium. So let me have I don't have a calculator in front of me, but you can do the math on it. Let's say you did, 40 grand in a 6-month period, you would get 8%. What would that be? $2,400, I think, as a cash bonus. So it's kind of a unique way to kind of like, you could think of it this way, is that you're adding 8% to your comp. So take your comp and add 8% to it. The other thing about Americo, they do offer a guaranteed issue product that's available. From what I understand, it's not very competitively priced, but it's there if you need it. Also, their underwriting, I'm starting to understand and take a look at their underwriting. It's pretty darn liberal. I mean, COPD, you can get the Ultra Protector 2, which is same day coverage. For insulin use, there's no age listed on insulin, so they could be insulin dependent from age 0, and they can still get qualified for same day coverage. For cancer, for the Ultra Protector, there's only a 2-year look back for cancer, where most carriers it's what Jimmy was talking about, it's a 3 to 4 year look back on cancer. And then also they have there's only a 12-month look back for certain health conditions like heart attack, stroke, or stents, or maybe they had bypass surgery. The one thing that you do need to look out for with Americo, though, is I haven't got the official comp grids yet, but from what I heard, is that if you look at their comp grid, it's a 10% lower commission on ages 50 to 59. So they pay higher comp on the higher ages, lower comp on the earlier ages. So take a look at when you get signed up with them, take a look at the comp grid. So um, if you have someone that's in their 50s, it'd have to be a pretty good reason to go with Americo versus another carrier to take that 10% hit in commission. But it looks like a great carrier. Looking forward to writing a lot of business with them. But that's all I have on Americo.
Cool.
You want to go Liberty Bankers?
Yeah, let's go to Liberty Bankers. Got a lot to say about that. This is another favorite of mine. Let's just stick with final expense for a second. Here's a big advantage. It's 0 to 80 on final expense, and it's one app which equals same health questions. So even though like these other carriers that they like Transamerica is an example, 0 to 85, but they have two separate health questions. With Liberty, it's the same questions for everybody, regardless of their age. Okay, so I really love that. They have 3 levels of coverage. You got your preferred and standard, which are both immediate, and then they have graded, which is a modified. It's a 3-year. I don't want to go into the mechanics of that. It'll be too lengthy to explain, but it is a 3-year graded benefit. But here's a couple of things I want to point out for the agent that really stands out. Okay, so number one, it is a phone application, so it's not a paper app. They do have like what they call a worksheet that you use to gather the information, ask the questions, but you don't turn that worksheet in. All the application is done over the phone. They do a phone interview with the customer, and they gather all the information. They get their permission, and basically at the end of the call, when you get the approval, you're done. You don't have anything to turn in. You're able to, and it's express pay, get paid in a couple of days. So that's pretty cool. And because it's a phone application, this is a great product for telesales. So I have a couple of people out in Houston that's all they do is work the phones and sell over the phone. If that's something that you want to do, you can do that as well. But I can tell you how I use it, on a practical basis. If I have a client that is in another city and maybe they need to get an additional product, or maybe they want their husband or wife now to get coverage, or maybe they had a policy that lapsed and they want to get another policy in place. Instead of me having to drive back out there for one client, I can just do this over the phone. We'll do a 3-way call with the carrier, get the interview done, and it's all handled over the phone. So I really like that about Liberty Bankers. They also have some other things that are a little different for the agent. So the first one is that they do a 10% reserve account. So that means like whatever your commissions are paid, they're going to pull out 10% of your commission and put it in the reserve account. And that is reserved in case you have a cancellation or a chargeback. And so instead of that, charging against you and you have a negative balance, you need to, pay it back or something, they'll just pull it out of your reserve account. So that's kind of neat. They also have a really cool lead reimbursement program. So as long as you qualify with a minimum of 10 sales in 1 month, they will reimburse you $30 for every sale. So if you had, 15 sales as an example in a month, they're going to give you $450 to go buy leads. And so that's a really good program with Liberty Bankers. They have a very liberal underwriting policy, which we'll talk about here in a second. And then lastly, I want to say about their leads is that they actually have your insurance group, our marketing organization, set up as a lead provider. And so with management approval, you could get set up to where you can actually have Liberty basically prepay your leads, order your leads for you, and then they will deduct the lead cost out of your commissions as you're placing business. And so that's kind of a unique program. Again, you do need to get manager approval for that. So if you're interested in that, maybe you're low on funds, you need some leads, that might be a really good solution for you. So let's go into preferred underwriting. They will do bipolar, they do diabetes as long as it was diagnosed after age 9. They will do insulin use as long as the insulin use came after age 25. And then, there's a whole lot of other stuff. Standard, they will take AFib if they had a pacemaker implant, as long as it was been more than 2 years since the implant was done. They can go standard, and they do COPD standard. They do Parkinson's standard. Here's one that unique is that you have somebody that has cerebral palsy, that could go standard, and systemic lupus is standard. Modified, if they had a heart attack or stroke less than 12 months, so, I mean, that could be a month ago, right? They could qualify for modified, which this is going to be a better option than the guaranteed issue. Also, if they've had cancer less than 1 year, they can go modified. So Joe, I don't know if you want to add to that.
Well, just on the cancer part, 1 year modified, but for preferred, they only have a two-year look back for internal cancer. I don't know if you mentioned that or not.
No, I didn't. So yeah.
Okay. The only other thing I'll add with them is that they do have a height and weight chart, but if you look at it, it's a lot more liberal than the other carriers. Just as an example, you can be 5'8" and just a little bit over 300 pounds and still get same-day coverage. Whereas with the other carriers, you'll probably be off the grid. So be careful of the height and weight, but it is extremely liberal.
And they also offer express pay, so I thought I'd say that.
Yes. That's it. The other product that they have, a Flex for Life, which we won't get into, but it's a very, very competitive, simplified issue.
Whole life.
Whole life. What's the word I was participating? Whole life is the word I was looking for. Oh, that also comes with 10 pay options as well.
10 or 20 pay. Yeah.
10, 20 pay. Yeah. So great carrier. Definitely check them out. Let's start moving through a little bit quicker because I think we covered the majority of them. How about AMAM? Anything on them?
They have a term, a product that has a ROP, but it only returns 75% of the premium, not 100 like Mutual of Omaha. They do pay as earned as well. I don't have a lot of apps with them, so I really couldn't elaborate on that one, Joe.
No, I mean, it's a good carrier, guys. We don't write a lot of business with them, but they do have a good look at products. One product I would say they do have, especially for those agents out there that do not have life and health. If you only have your life license, they have a unique accidental policy. Now, normally, like with Mutual of Omaha, if you sell the standalone accidental, that's technically, you have to have a health license to sell that. American Amicable has a workaround. They have an accidental policy that also, it's built on a whole life chassis. So the client gets $1,000 of whole life, but because it's built on that chassis, they're able to do the accidental rider, and you can do that standalone product, and you don't need a health license to write it. So that would be kind of one benefit maybe to look at if you're interested in writing some accidental policies and you don't have a health license.
Cool.
How about we move into Life Shield, our guaranteed issue term product?
So the biggest advantage here is that Life Shield is you're able to do undocumented people. So, you got somebody that doesn't have, citizenship or residency. You can do them with Life Shield. It is a graded product, ages 18 to 74. It's a 5-year renewable, so the rates do go up depending on the age band. Normally, it looks like most of them don't go up for 10 years, but it just depends where they fall in the age band. I'll tell you this, that it pays more like health insurance in that, you're not advanced anything. It's paid as earned. It's a very low comp, but you get it the life of the policy. So, if they have that policy 10, 20 years, you're going to continue to get paid on it 10 or 20 years, as long as that policy is in force. The rates are competitive. They pay if because it's graded, if they are to pass away in the first year, they will pay the return of premium plus 20% in year one. If they pass away in year two, they pay 20% of the face amount. And then if they died after year two, then it pays the full death benefit. Now we're talking about natural causes. Any of these graded products, if they die by accidental, it's a full, it's full death benefit. But that's what I have on Life Shield.
Yep, guys, it's a great product, very niche product. The other thing too you could use Life Shield for is for those uninsurable people, not only with health reasons, but what about the person that's been incarcerated or multiple DUIs and they have strung out on drugs and the parents want to get some insurance on the person or so I mean you can use it. It's literally no questions asked and it's a term product and it is convertible by the way. You don't get paid on it, but it's a selling point to the clients that once they've had the product that it could be convertible into a whole life product, kind of a selling feature. All right, let's move on to Assurity because I know you got some good things to say about them. And then let me just make a comment, guys. I know that we're running a little bit over. That's okay. Stay on if you want to. If you need to drop off, go ahead. I understand we're running long. This will get posted on the website. This is going to be a great training video for you to be able to refer back later to get kind of a brief overview of all the carriers. This video could be utilized as a good recruiting tool as well to talk about all the different carriers that we have. So Jimmy, let me go ahead and turn it back over to you and then tell us a little bit about Assurity.
Okay. Well, I got to tell you, one thing I really like about Assurity is their support. Christy McGarian has been really, really helpful. But I'll just point out some really quick niche products. So one, they do offer single premium. If you guys don't know what single premium is, that's for that client that maybe they tell you that they have 10,000, 15, 20,000 in the bank, and that's what they're going to leave their family to cover their funeral costs. And you can convert that one-time payment into a life insurance that's going to give them a higher death benefit. I recently wrote one where the lady put 15,000 and turned around and had a $22,000 death benefit. She was 78 years old. Just to kind of throw that in perspective. So
that's pretty amazing, dude. 15
yeah.
to yeah, exactly.
22, and it's kind of unique. I don't want to go into the dynamics of it, but with the cash value accumulation, the death benefit actually increases over time. So the initial death benefit was 22, and that would continue to increase. So that's one product. They also have another one. They call it Axa Flex. Really cool product. It's an accidental death benefit that has a rider that you can do a disability income on. So for example, if you have somebody that wants a disability income, but maybe they don't qualify, because this is a non-medical product, I don't know if it's a guaranteed issue, but I mean, it's because it's accidental life, they don't look at the medical conditions, and then you can add the disability income rider, so you can still get that in place. I got one of these for my wife. She's got $350,000 of coverage with the $3,000 a month disability, and I think our payment's like $38 a month. So that's it's a pretty cheap product.
It's great for construction workers, anybody like that, man. And like you said, there's no medical questions. It's not guaranteed issue, Jimmy. It's been a while since I've written one, but from what I remember, the only medical question is if you have AIDS. I don't know why they ask it, but it's on the app. And then they do ask about driving record. So they will run a DMV. So if you got a guy who's a multiple speeders, reckless driving, and a DUI, probably not going to be a good candidate for that product.
Cool. And then they have a joint whole life product. That's kind of cool. So, let's say you have a couple really on a tight budget, they want to cover both of them. You can, go ahead and write on both. What makes their joint life unique is that upon the passing on one, the policy doesn't cancel. They can continue coverage on the other. There's some special mechanics I'm not really elaborating on in detail, but I mean, if you need a joint life, get the product information on it. It's really unique and it's very cool.
Awesome. Let's skip over to Fidelity and Guarantee.
Okay.
One of our favorite carriers.
One of my favorite, yep, F&G. I mean, first off, I'll tell you this: they got like probably the best pricing for IULs in the industry. You can use this for somebody that wants to supplement their retirement, and you want to structure that property where you got the least amount of life for the maximum amount of cash accumulation. But if you just want to get somebody a really good permanent policy, you can actually beat whole life policies with this. I'll give you an example. My brother-in-law, who is 38 years old, he wanted a $50,000 whole life policy and he also wanted to blend it with a $250,000 term life. So we did a blend. But anyway, he's 38, 50,000, non-smoker, good health. Fidelity got him $37.99. That's a whole life. And so that's I shouldn't say a whole life. That's an IUL that's designed to last to age 100. So, I mean, it's a really good product. They also have really competitive annuities, very competitive annuities. I really like their annuity program. And, if you write a lot of annuities, you can even qualify for some bonus money at the end of the year that they put into. They start a 401k for you and they put it in there. It's kind of a unique program. Again, I'm not going to elaborate on that, but if you're writing a lot of annuities, you might want to look at that.
Yeah, definitely look at their annuity products, guys. They have one of the best, like most robust portfolios of annuities, and they have one of the highest comp grids out there for their annuity product as well. So if you ever got a client, here's what I would recommend. If you have a client that's in the market for an annuity, I would probably take a look at F&G first before you look at the other carriers. Anything else, or do you want to move on to Nassau Re?
Let's go to Nassau Re.
All right, formerly known as Phoenix.
Yep.
Okay.
Here's what I can tell you about Nassau Re. If you had somebody that they're sitting on, let's say a nest egg of money, and they're ready to retire, and they want to draw an income for the rest of their life, right? They're not worried about the accumulation anymore. They just want to see what's the most that they can get for an income. Nassau Re, nobody's going to beat them. I mean, they have some really amazing bonuses and some income. I guess you can say the account value and the income, I think, earns is it 10%, Joe?
On the it's on which product?
On the immediate income. I think
if it's an income today, then they have the bonus, and then they can start payments within like 30 days.
Yeah.
If it's the income tomorrow, it's 14%.
I mean, those are some ridiculous numbers. But
it's 14% for a certain amount of years, and then it goes to 10%, and it's guaranteed for 10 years.
And again, I just got to specify, this is for somebody that wants income, not accumulation. Okay. But
exactly.
Nobody's going to beat the income. And then, are you ready to move on that one?
Yeah, absolutely. We'll go through these last three pretty quick.
Athene is probably my favorite annuity right now. They got some
Right on.
really cool products. They're indexed. You know what makes them my favorite is two things. One, on the indexed strategies, they got a couple of options that have no caps, and for an annuity to have no caps, it's really cool. They also will do an immediate income. So if they need to draw an income next month, they have a product that you can do that with Athene. But I mean, their sub accounts are really cool. I mean, they perform really well. Probably the best thing I can say about this, if you have somebody that really wants to accumulate their cash value and have a very consistent growth of typically 6%, maybe even better, with no risk of loss. And then on top of that, they can have an income rider that's going to assure them to have an income for life. It's a great product for that. I don't know if you want to add anything to that, Joe.
No. Athene's a great product. I recently wrote one myself, so it's good product to have.
All right.
National Life Group.
National Life Group, man, what can I say is that was my very first carrier that I ever got appointed with, and just because of that, I loved them so much for it. They got a really great IUL product. They have really good annuity products. I can tell you this, their IULs probably have the best living benefits in the industry. I haven't seen anybody do better than them. They perform extremely well. On the annuity side, I can tell you that they have a very cool indexed annuity that people, if they don't have a bucket of money, maybe they want to save. There's no minimum amount to start it as long as they set up on a bank draft of $100 a month or more, then they can start their own annuity program. But I mean, they have a lot of cool stuff, very competitive. They do list bill also. So if you do get a group of a small group of business owners, something like that, you can do a list bill with National Life Group.
Awesome. Great company. Great products. I own one of their IULs as well. And then how about last but not least, Equitrust?
Joe, I don't know a whole lot about Equitrust, but I can tell you about one product in particular that's kind of unique and cool. And that is if you have somebody that has a long-term care need, they actually have a product that has their long-term care, they have a death benefit. So if they didn't use it, it actually passes on to the individual. It's kind of hard to explain it in detail, but I mean it's a lot different than some of the other long-term care products out there. It's not like it's a rider with a return of premium or something, but it grows and looks a lot like life insurance, but it's a long-term care product. So
Got it. Guys,
and
Equitrust is a newer company. I'm not familiar with all their products as well. The one product I am familiar with, because I wrote it on myself, which is a great thing for anybody listening to this call, all of our independent agents. If you're ever interested in setting up a SEP for yourself, a SEP is a simplified employee pension plan. They do offer those with flexible premiums. So this is for a type of plan that if you want to make monthly or yearly contributions. So this would be great for yourself to take a look at that, or if you know some small business owners that are looking to save money in a retirement, they have a great SEP program. And that's all I really know about them, Jimmy.
cool. You know what I was going to say about that long-term care is that it works with a single premium. So if you had somebody that has some money, maybe 20, 30, 40,000, 100,000, whatever, and they kind of want it for life insurance and they kind of want it for long-term care, they can make that happen. It's kind of a cool product. But that's all I have for now. I know we went way over.
Well, we did, you know what? But this is great to have this information. We can get it posted on the website, and this will be a tremendous video for training and for referring agents to say, hey, you want to learn about our carriers? Go check out this video. I'll give you a brief overview for all the major carriers that we work with. But guys, thanks for sticking on, and that completes the product training portion of today's call, the carrier overviews. Everybody have a great weekend. Jimmy, you want to go ahead and sign off for us?
All right. Well, thank you guys. Good selling. And don't forget about, if you're in the Dallas area, we'll be there Tuesday, 2 to 4 at Liberty Bankers.
Amazing. Thanks, Jimmy.
Thank you.
Have a great weekend, all. Take care.